Hey there, and welcome. We're about to pull back the curtain on UK taxes. From the numbers on your payslip to that side hustle you're passionate about, we're going to make sure you know exactly where your money's going, and more importantly, how you might be able to hang on to a bit more of it.
Now, this entire discussion was put together by the brilliant folks over at Pro Tax Accountant. They're on the front lines every single day, and they see how just getting a handle on these rules can make a massive difference to your bottom line.
I mean, you're not alone, right? It's that classic feeling. You stare at your payslip and just think, where did all that hard-earned cash actually go? It's like a chunk of it just vanishes into thin air before you even get a chance to say hello.
But what if I told you that some of that vanished money might not be gone for good? You see, the tax system is pretty complex, and because of that, mistakes are incredibly common. Understanding it is the key to making sure you pay what you owe and not a single penny more. So let's dive in.
Okay, first things first, we've got to build a solid foundation. When it comes to UK tax, pretty much everything else is built on top of a couple of core ideas.
Before we even get into what you have to pay, let's talk about the best part, right? The money you don't have to pay tax on. Almost everyone in the UK gets a tax-free head start on their earnings. And here it is, £12,570. For the 2025-26 tax year, that's your magic number. Think of it like a tax-free starting line. You can earn all the way up to this amount without paying a single penny of income tax.
So, that's the tax-free bit. Simple enough. But what happens to every single pound you earn above that $12,570? Well, that's where things get a little more interesting and where tax bands come into play.
Now this is super important. HMRC doesn't just tax all your money at one single rate. They slice up your income. So say you earn £60,000 a year. You're not paying 40% tax on the whole lot. No way. Only the portion you earn above that £50,000 threshold gets hit with the higher rate. It's a progressive system.
Okay, lean in for this next bit, because it is absolutely crucial, especially if you're a higher earner. This is a very common and very costly trap that a lot of people fall into without even realizing it.
The moment your income ticks over £100,000, that lovely tax-free allowance we were just celebrating, well, it starts to get chipped away. For every £2 you earn over the limit, you lose £1 of your allowance. By the time you hit £125,140, poof, it's completely gone. This creates a really sneaky hidden tax rate. Because you're paying 40% tax and losing your tax-free cash, your effective tax rate in that specific income bracket actually jumps to a whopping 60%. It's a massive and often surprising jump.
Right, so how does this all actually show up on your monthly paycheck? Well, for most employees, it's all handled for you through something called the PAY system, and it's all controlled by one little code. Let's crack it.
Your tax code, think of it as a little message from HMRC to your boss's payroll software. It tells them exactly how much tax to take off you each month. For most people with one job and no funny business, that code will be 1257L. The L just means you get the standard tax-free allowance.
But what if you see something different? Well, if you've just started a new job and you don't have your P45 from your last one, you might get put on an emergency tax code. And trust me, it's not a fun emergency. It almost always means you're overpaying tax, sometimes by a lot, until you get it sorted out.
And here's a pro tip for you. You don't have to just sit and wait for someone else to fix this for you. You can actually go online to your personal tax account on the gov.uk website, check your code, and update your details right then and there. It literally takes 5 minutes and could immediately increase your take-home pay.
Okay, that's not all. Juggling a second job is super common these days, but it's a classic tax tripwire. The system is really built for one person, one job, so you have to be careful. Here's where most people go wrong.
The golden rule is this. You only get one personal allowance. Just one. So your main job should use the 1257L code to get that tax-free benefit. But your second job, that employer should be using a BR code, which stands for basic rate. It tells them to tax everything at 20% right from the start. If both jobs are using that 1257L code, you're going to get a nasty bill from HMRC down the line. Guaranteed.
Okay, that's employees covered. But what about all you freelancers, sole traders, and side hustlers out there? When you're the boss, the rules of the game change completely. You're not just the expert, you're the accountant, too. This is probably the single most important thing to get your head around. You are taxed on your profit, not on your revenue. So it's not about all the money that comes into your bank account. It's about what's left after you've paid for your business costs.
So what counts as an expense?
Well, basically anything you buy wholly and exclusively for your business. We're talking phone bills, internet, software subscriptions, that train ticket to meet a client, your website costs, even a portion of your home bills if you work from home. Every single legitimate expense you claim lowers your profit, and that in turn lowers your tax bill.
And hey, if your side hustle is still pretty small, I've got some great news. You can earn up to £1,000 from it completely tax-free. And you don't even have to tell HMRC about it. So if you're like Sophie, making and selling awesome candles online, and you make, say, £950 for the year, you're all good.
And guess what? It doesn't stop there. There's another £1,000 allowance for property income. So if you're renting out your driveway or a spare room through an app on a casual basis, that first grand is also completely tax-free.
And for you investors out there, there's a little something too. The first 500 quid you get in dividends from company shares is also tax-free. You see, all these little allowances really start to add up, so it's crucial you know about them.
Okay, a tax return can sound super intimidating, I get it. But honestly, it's all about good habits. Keep track of everything as you go. Get an app for your receipts. But the absolute non-negotiable rule, put money aside for your tax bill. Just squirrel away 25 to 30% of your profit into a separate account. If you do that, that January 31st deadline won't be a terrifying surprise.
All right, let's get into some quick wins and common mistakes to avoid. This stuff applies whether you're working for someone else or you're your own boss.
The marriage allowance is a huge one people miss. If one of you earns less than the tax-free allowance, you can transfer a chunk of it to your partner and save over £250. You can also get tax back on things like work uniforms, tools, pension payments, and even charity donations. But here's the thing. HMRC isn't just going to hand these over. You have to actively go and claim them.
And get this, here's a fantastic little-known fact about the marriage allowance. If you just now realized you were eligible for it, you can actually backdate your claim for up to 4 previous tax years. That could be a really nice check from HMRC coming your way.
Phew, we've covered a lot, right? And it's pretty clear that while the tax system makes sense, it's also absolutely packed with little details, pitfalls, and traps. It's just so easy to miss something, and that can cost you real money.
Which brings us to the big question, really. Why are you trying to figure all this out on your own? It's stressful, it's time-consuming, and you could be leaving hundreds, maybe even thousands of pounds on the table without ever knowing it.
Just look at this real-world example. Take Reese, a self-employed kitchen fitter. He was doing his own books and thought he was doing okay. Pro-tax accountant took one look and found nearly £8,000 in deductions he'd completely missed. They changed his VAT scheme, saving him another $2,000, and cut his annual tax bill by over £4,000. They even got him a refund of over £2,400 for mistakes in past years. That is the real-world difference that expert help can make.
So if any of this is ringing a bell, or you just want that peace of mind that comes from knowing your taxes are done right and you're not overpaying, it's probably time to chat with an expert. The team at ProTax Accountant is brilliant, and they offer a free consultation completely tailored to you. You can ping them on WhatsApp or call them on 07985 689912 or just drop an email to info@protaxaccountant.co.uk.
I really hope that helped to clear things up a bit and demystify the UK tax system for you. For more clear, straightforward advice just like this, make sure you hit that subscribe button. Thanks so much for watching.